In this video, I'm going to take you through how students could have attempted this particular question, which appeared in the December 2022 subject, Basic Finance. I have made some changes to the question for learning purposes. There was no requirement for students to prepare the trial balance. The trial balance was already given. Students were instead required to prepare the statement of profit or loss, and further they were required to prepare the statement of financial position. So what I have done for learning purposes is that I have made adjustments requiring you to begin with the trial balance, and the question read as follows. The following information relating to James Kalwashi as at 31 December 2021 is given. Prepare the trial balance. And so here is the information right over here. What we have to do is to prepare the trial balance. In the process of preparing the trial balance, what you always need to do, and let me just create some space here. I'm using Excel, which you will not have the privilege of using an exam, because you will be writing all this using your pen. So the first thing that you always do when you're preparing the trial balance is to make sure you indicate the name. Whose account are you dealing with? So it is James Kalwisha, like that. And what is it that we're doing? Is we're preparing the trial balance as at 31st December 2021. I need to clearly indicate that in this particular column, this is debits and the shortcut is DR. And in this particular column, it's credits. And the currency that we're using is Kwacha, and the currency here that we're using is Kwacha. Obviously, they would need to be the same, right? So when we look at inventory, we start with inventory. For each one of these figures here, they are for each one of these items. So we need to clearly indicate whether these particular figures are correctly indicated as debits, or if it is under this particular column and it is not supposed to be there, we move it to this particular column. At the end of the activity, a trial balance is going to have debits and credits which are equal. The total figure for debits is going to be equal to the total figure for credits. Let's begin to look at each one of the items and begin to align each one of the figures corresponding to those items and place them correctly as debits or as credits. Inventory as at 1st January 2021. Inventory. What is inventory? Inventory is stock. Inventory is a debit, so it's correctly placed here. Purchases, we have bought goods into the company, into the business. So this is correctly placed as a debit. Sales are credits. So I'll move this here. Sales are credits. Rent is a debit. Sales returns is a debit. Insurance of motor vehicle is an expense. All expenses are debits. So rent, for example, is an expense to the business, a specific expense to the business, it is debited. Insurance is an expense, it is debited. Purchase returns are credits. Sundry expenses are debits. Wages and salaries are debits. Motor vehicle at cost, this is an asset, it's also going to be debited. Machinery is also going to be debited. Trade receivables is also going to be debited. What is trade receivable? A trade receivable is where we or a business has provided a service and is waiting for payment, and so that is a debit. Trade payable. A trade payable is when a business has consumed of a service and is yet to pay. In another way, Ninkongole. So this is actually a credit. Bank, money in the bank, that's a debit. Accumulated depreciation on motor vehicle. This means that over a period of time, a motor vehicle that we purchased is going to lose value, and this value is accumulating over a period of time. This is a credit. Drawings are a debit. Capital is credit. like this. So the total of this should equal the total of this. So if you have your calculator, just pull it out and begin to calculate. So you have got 16,400 plus 52,000 plus 8800 plus 1800 plus 3200 plus 2800 plus 60, 80, 800 plus 74000 plus 64,000 plus 30,000, like that, plus 6,000 and plus 23,400. This is what it gives me. It gives me, what was that number again? Let's pull it out. 343,200. 343,200. That's what it gives me. Now, since I'm using Excel, I could simply do this, sum this up, get all these, just use a formula, and that's what I could do. But I was deliberately using a calculator because you will be using a calculator in the exam, and so we know that this trial balance is okay because the total of our debits is equal to the total of our credits. In preparing the statement of profit or loss, additional information is usually given, and I have put that information right below here. This additional information is given on the actual exam and in the actual exam question paper, and this information is important for you to prepare both the statement of profit or loss and the statement of financial position. What we're going to do right now is to prepare the statement of profit or loss, and we'll have to take note of this information that's given right over here. So as usual, the first thing that you do is you indicate that this is an account for James Kalwisha, like that. And what we're preparing is the statement of profit or loss for the year ended. For the year ended, we are told it's going to be for the year ended 31st. It's down here. What we're required to do is to prepare a statement of profit or loss for the year ended 31st December 2021. So it has to be 31st December 2021. That's where we start. What are we going to do? We have to indicate the sales. And how much were the sales? The sales are given in the trial balance. Here are the sales. Okay, so I am simply going to, okay, let me put there. This is the sales. Sales amount is right over there. What should we do? Okay, we need to take note. Were there any returns from the sales? Were there any sales that were brought back to us? Yes, we have got sales returns. So we need to less sales returns. And what's the figure for sales returns? Sales returns is here. 1,800. This is 1,800. So it's going to be less this amount right over here. Okay, so what do we get when we subtract this from this calculator? I could use the formulas, but I'm trying to be as natural as possible. 211,800 minus 1,800. It's going to give me 200. It's going to give me 210,000. Okay, so this is the 210,000 that's over here. That's what I'm getting. All right. We need to take into consideration the cost of goods. And when we take into consideration the cost of goods, what are we taking note of? We're taking note of purchases. And how much were the purchases? We go to the trial balance. That's where we'll find purchases. It's here, 52,000. And we're going to take note of that. Purchases is right over here. What are we going to do? Were there any purchases that were returned? The business bought some stuff, then returned some stuff. So are there any purchase returns? Yes, there are purchase returns right over here. So what we're going to do is we're going to less purchase returns. purchase returns. Okay, I may need to move this just to create some space like that. So it's going to be less purchase returns, and purchase returns is what's the figure for purchase returns? 6,000. It's right over here, 6,000. Purchase returns is 6,000. Okay, what else do? We add our opening stock. Add opening stock. Where's our opening stock? It's right over here, 16,400. You check the date. When the date is at the beginning of the month, it is what you opened with. If the date is at the end of the month, it is what you closed with. Opening month, opening stock. Closing of the month or ending of the month, closing stock. And so, right, what we have here is 16,400. Then we are going to less closing stock. And how much is the closing stock? The closing stock is given to us in the additional information. This one here. Inventory at 31st December 2001 was at 18,200. 18,200. And so it's going to be minus 18,200. Like that. So what is the total for these? What is the total for these? Once more, I'll pull out the calculator. We have 52,000 minus 6,000 plus 16,400 minus 18,200. This gives us 44,200, and this is what I'm going to write over here, 44,200. What we get when we subtract this from this, please take note, we are subtracting this from this, and what we get is what is known as the gross profit. Let's do the subtraction. Calculator. 210,000 minus 44,200. What we get is 165,800. Which is our gross profit. So we are done with the first part of the statement of profit or loss. We are done with the first part. When the examiners are marking this work, at this particular point, they will look at the gross profit. They will not look at all the actual entries. They'll look at the gross profit and give you a mark for the gross profit. They'll look at what we're going to look at next, which is expenses. We need to take note of expenses. And expenses are the costs that the business incurs in the process of running the particular business. In this particular case, what expenses were incurred? And we are given from here, we can figure out what the expenses were. There's rent. We can go through one step at a time. Okay, is this an expense? No. Is this an expense? No. Is this an expense? No. Is rent an expense? Yes. And how much was the rent? The rent was, this is the rent, it's that amount. Is sales returns an expense? No. Insurance of motor vehicle an expense? Yes. So we're going to write insurance. I'll just write it in short like that. Insurance, and how much is the insurance? It is that amount. Okay, let me just create some space here so that we know what we're talking about and we can keep track. What do we have next? Purchase returns. Is this an expense? No. Is this an expense? No. Wages and salaries an expense? Yes. So put wages and salaries. Again, wages and salaries, just to make sure the work is orderly, some space. Okay, like that. Wages and salaries is how much we are given. Wages and salaries, that's the amounts. Next, motor vehicle at cost. Is this an expense? No. Machinery expense? No. Trade receivables an expense? No. Trade payables an expense? No. Bank an expense? No. Accumulated depreciation? Accumulated depreciation, what is an expense is depreciation only. What is accumulated is what's known as a contra entry, which simply put, you will not put here. Drawings, no. Salaries, no. Are these the only expenses? Well, yes. Maybe no. Maybe yes. Let's run through again just to make sure we're clear. Inventory, no. Purchases, no. Sales, no. Rent, yes. Sales returns, no. Insurance, yes. Purchase returns, no. Sundry expenses. So you see that I missed out sundry expenses. So I'm going to make sure I write that. This is what? Sundry expenses. There it is. And the amount allocated to sundry expenses is 2,800, like that. Correct. Are these the only ones? No. Yes, baby. Are these the only expenses from the trial balance? Yes. But we have been given additional information, and this is very important. We have been given additional information. And from this additional information, we have number one, inventory information, which is not necessary at this point. But we've been told that there's rent prepaid. Rent prepaid. What does that mean? It means that we have paid. It means that James has paid rent ahead of time. So we are in January currently, January 2023. It means that James has paid rent probably for the next 3 months or for the next 4 months. But the figure is given that the rent prepaid is 800. What we're going to do is we are going to actually indicate rent prepaid here. We are going to indicate rent prepaid, but we are going to subtract it. How much is it? 800. We are going to subtract rent prepaid. So we've taken note of this information. Then number 3, we've been told that wages and salaries accrued, meaning you are actually accruing. You are growing how much you owe. And how much is it that you owe? Additionally, it's 1,400. Accrued expenses. Just simply take note that all accruals are added and all prepayments are subtracted. Just remember the word accrued, so add. What is it that you're adding? Wages and salaries. Wages and salaries. Just make sure you put there accrued, so you don't mix them up. Is that the correct spelling for accrued? Let's see. The correct spelling for accrued is R-U-E-D, like that. Accrued wages and expenses. Let me just create some space here. Accrued wages and expenses. And how much are these? 1,400. Take note of that. What else? Is there anything else that we need to include under expenses? The answer is yes. We need to look at depreciation. Look at this particular additional information that's given. Number 4, the motor vehicle and machinery are to be depreciated at 20% and 25% respectively. Depreciation is loss of value. If you buy a car today at 70,000 kwacha and you intend to sell it next year, it's no longer going to be the same amount of 70,000 kwacha. Why? Because the value would have depreciated, meaning there's going to be a loss. And so what we need to do here is we need to indicate that there is depreciation. Depreciation of what? Depreciation of motor vehicle. So write depreciation, motor vehicle, like that. There's also depreciation of machinery. There's also depreciation of machinery, like that. But what are the actual amounts? So we are told that the motor vehicle depreciates at 20%. So what is the value of the motor vehicle? The value of the motor vehicle is 74,000. The value of the motor vehicle is 74,000, depreciating at 20%. So I'll pull out the calculator right here. Yeah. So motor vehicle is how much? Motor vehicle is at 74,000. Depreciation at 20%. So 20% is 20 divided by 100, right? I'm making it really simple, and you multiply this by the cost, and you multiply this by the value of the motor vehicle, which is 74,000. What do you get? You get 14,800. 14,800 as the depreciation for motor vehicle. So that's what you're going to write here, 14,800, like that. The next is depreciation for machinery. Depreciation for machinery, and we're told that the machinery is depreciating at 25%. 25% of what? 25% of 64,000. 25% of 64,000. So it will be 25% multiplied by 64,000. 64,000, and that gives us 16,000. It gives us 16,000. Any further additional information? No further additional information. No further additional information. So what we're going to do now is take note of our total expenses. And total expenses is these put together. But we'll write them there, right? Because they have to be in this particular column where all this other information is. So total expenses is going to be, okay, I'm going to use a formula at this point. All these put together, and it gives us 107,000. 107,000. Are we done? No, we're not done. What we need to do now is we need to calculate the net profit. Need to calculate the net profit, and the net profit is basically all these expenses subtracted from the gross profit. The expenses subtracted from the gross profit. And so once more, pull out the calculator. 165,800 subtract 107,000, and this gives us 58,800. 58,800. And this is our net profit. And that's it. This is 10 marks right over here. What a student needed to have done to get the 10 marks that were allocated to attempting this particular question. In roughly 10 to 15 minutes, you can be done with this particular question, get your 10 marks, and move on to attempting other questions. So next, we're going to prepare the statement of financial position. Remember to subscribe to my YouTube channel, Captain37, and also like and follow my Facebook page, Marketing Study in Zambia. My name is Savoy, and I'll see you in the next video.